So once you're above 31,000, let's say we touch, in fact, I think in the overnight we might have even kissed 31,000, you have to start to get a little bit more careful on Bitcoin. All right, now could it break through this high? It certainly could. Now again, I don't necessarily believe it's altcoin season. Like you'll hear all these people like, oh, it's altcoin season. Not necessarily. I mean, things bounce. If you looked at this chart, it was due for some sort of bounce. That's just the nature of it. Things get bounces, and they should.
Experienced trader Gareth Soloway, with 2 decades of experience, has shared insights on recent market sentiments, signaling positive trends in both crypto and gold charts. Bitcoin is currently experiencing a battle between buyers and sellers around the $30,000 price point. An encouraging sign is that buyers have maintained their ground without significant losses. On Tuesday morning, the world's largest cryptocurrency, Bitcoin, continued its price rally, aiming to surpass the $31,000 mark in the recent surge. By the end of the day, Bitcoin's price surged to $35,000, marking its first time crossing this threshold in 2023. The spot trading volume also saw a significant increase, rising by 187% to $50 billion, and the market capitalization grew by 13% to reach $676 billion. In Soloway's chart analysis, when Bitcoin reaches or touches the $31,000 level, it's wise to be cautious. Although Bitcoin could potentially break through this level, a technician should recognize and honor this resistance. Based on CoinGecko data, most altcoins have been underperforming. These have all managed to register double-digit gains in the last 7 days. Polygon's Matic token has seen double-digit gains of 17% in the past week, decoupling from Bitcoin's price movements. Cardano, much like the broader crypto market, has seen a recent rebound. This upward movement began from the October 19th low of $0.247 and has been holding steady until now. In a tweet, Soloway suggests the possibility of ADA breaking out of a long-term wedge pattern. He identifies the initial minor resistance levels at $0.27 and then $0.30. Soloway describes ADA's current price situation as beaten down, which could potentially indicate that a bounce is on the horizon. We have a few clips of Soloway's analysis that we'd like to share with you. Before we begin, make sure to subscribe to the channel and click the bell icon for the latest updates.
Let's talk some cryptocurrency. So crypto, we saw a beautiful move up. Now remember, this is the beauty of it. And by the way, I'm riding a long in Bitcoin with members of Verified Investing Crypto at verifiedinvesting.com, and we are in the money nicely. I do, however, happen to think that this is going to be huge. This area right in here, pivot point here, also this pivot point, those two pivots coexist with this area. So once you're above 31,000, let's say we touch, in fact, I think in the overnight we might have even kissed 31,000, you have to start to get a little bit more careful on Bitcoin. All right, now could it break through this high? It certainly could, but as a technician, you need to respect this. All right, doesn't mean it can't break above it, but you need to respect it. And that's the key, guys. So watch this. Bitcoin, again, beautiful move to the upside. We've seen some amazing moves in the altcoin market. Speaking of altcoin moves, let's take a look at some of them that I highlighted last week. This was a beautiful one. Remember this pattern on Matic. Matic again, here was your wedge pattern, beautiful wedge here. We had this pivot low with this pivot low with this and this and this and this. And I talked about potentially a breakout, and that's exactly what has happened. Now, again, I don't necessarily believe it's altcoin season. Like, you'll hear all these people like, oh, it's altcoin season. Not necessarily. I mean, things bounce. If you looked at this chart, it was due for some sort of bounce. That's just the nature of it. Things get bounces, and they should. A breakout like this, right, does not necessarily mean that all of a sudden it's a new bull market. It just means that it was due for a bounce. Now, one of the things you have to respect about this is that already you've come into some resistance. If we look at this pivot top and we draw a line right across, that it coexists with this top. So that is resistance. If it gets through there, your next level is going to be right up here, which is right around the 28-cent level. I could see this going maybe as high as 30 to 31 cents. But then I would start to get a little bit more on the bearish side of Cardano, okay? So right now, Cardano looks good. It's had a big move. It's into resistance. But Again, maybe if it can break through here, it has a little bit more to go, but be cautious here. I am not in the camp that all of a sudden this is a new bull market in crypto. I am not. We don't have those signals yet in the markets. And by the way, one of the issues that I have is that far too many people have gotten very bullish on crypto again. And again, what's so interesting is that if you look at the stock market, the bullishness is much slower to take hold. All right, slower. Like if you look at the October lows, people didn't, when October lows bounced 3%, people weren't like, oh, we're going to new all-time highs. It actually took on the NASDAQ, and I want to show you guys this. This is pretty remarkable. All right, so if we go to the NASDAQ chart here, and we look at the October lows, in fact, let's zoom out here and go back here, right? So on the NASDAQ, this is mind-blowing, but this kind of shows you how crazy the crypto markets are and how you have to be careful with them, is that when we made these lows, no one was saying new all-time high. New all-time high talk didn't come in until you were all the way up here, all right? And then look at the top being put in right there, and now we're starting to come back down. And by the way, I still remember arguing with people, even talking about this in interviews, how I was saying, no, we're not going to new all-time highs right here. You're going to actually roll over. But again, that's for another discussion on the charts. All right, quickly going to the chart of Matic real fast here. Matic, good breakup as well, but it is starting to stall out. Just keep an eye on this same chart, right? Same thing. Right in here, you have resistance, and then right over here, same kind of deal. And it's a great run. Percentage-wise, it's a nice run. 20% move, maybe even about 25% from peak to trough, but it's starting to hit resistance on the altcoins.
A strong price action in gold this month has provided a bullish price momentum to Bitcoin. Bitcoin saw a significant 14% price increase this month, while gold, in contrast, recorded a more modest gain of 6.7%. It's worth noting that gold's increase came a week prior to Bitcoin's surge, possibly due to escalating tensions between Israel and Hamas and ongoing speculation regarding the Federal Reserve's monetary policy, suggesting the anticipation of an inflationary period. Soloway's recent tweet stated, "Gold faces resistance at $1,985. Stock market in a precarious situation due to rising yields. Jerome Powell prepared to intervene. But history suggests the Fed can't fully address the issue until a crisis triggers a major meltdown." Now, let's shift our focus to a video.
We are looking at a level on gold. I talked about it last week in the game plan on Friday. I said, guys, be ready for a pullback in gold. Gold, again, is at a level where you have to anticipate a little pullback. Now, you know I'm the biggest gold mid to long-term bull out there. I'm a huge fan. I think it's continuing to go higher. But remember, that doesn't mean you can't be a bear in the near term. And I think this is something that many investors don't understand, but I hope more of you do. A lot of you guys that are watching do. It's that just because you're bullish doesn't mean you have to be a perma bull in all time frames, right? You can say, oh, it's a little bit overbought. You can admit that. You can be like, listen, I'm long gold, and I have a big gold position. I do. It doesn't mean I have to be like, no, gold is going up. I don't care what anyone else says. It's never coming down. Like, no, dude, be realistic, right? Be realistic and look at the chart. That's why the charts are here. Pivot high to pivot high, so you just get a pullback. You don't have to make $1 million overnight. People are so greedy like that. Like, let your position play out. If your long-term thesis is intact, who cares about the short-term movement? I'm a short-term trader for the most part, but I do have long-term positions in gold. Again, small pullback so far today. This would be your max drawdown, back to your trend line, scene of the crime. We know that term, scene of the crime. And then potentially the next leg can start. Now, it doesn't have to pull back here. It could go like this and then break up. But the point is, you're overbought into resistance. Let it consolidate. It's stronger. The worst charts in the world are ones that don't pull back and they go straight up. Those are the charts that collapse back down. The best charts are stair steps like this. This is the best, strongest chart out there because what it's doing is it's consolidating and digesting and building strength for the next move. Building strength, next move, building strength, next move, etc. Those are the charts that will be in the longest bull market that you want. Those are the most consistent bull markets. All right, it's those crazy vertical moves that come crashing down because people end up honestly holding the bag. They buy at the highs and you see what happens as we come down.
Both gold and Bitcoin are seen as stores of value and hedges against inflation. Since Janet Yellen thinks the interest rates would be high, it directly contributes to inflation. A rise in gold prices, reflective of inflation, could also make Bitcoin more attractive to investors. BTC remains an even more interesting asset, given perfect portability, inflation hedge, and government-agnostic wealth preservation. That concludes our conversation for today. If you have any thoughts, please share them in the comments section. If you found this content informative, please consider giving it a thumbs up and subscribing for the latest updates. Thank you for being here with us.